The world holds its breath when the leaders of its two most powerful nations meet. A summit between an American president, Donald Trump, and China's leader, Xi Jinping, is more than a simple diplomatic event. It is a moment that can redefine the global order. Their discussions, intense economic competition and geopolitical rivalry, send ripples across every continent. For a nation like Bangladesh, strategically located and deeply integrated into the world economy, these ripples can feel like tidal waves. The outcomes of such a high-stakes meeting, hypothetically in October 2025, will reshape international trade investment flows and regional security, creating a complex new reality for Dhaka to navigate. The significance for Bangladesh cannot be overstated. As a rising economic star, its prosperity ties directly to US-China issues. Its gargantuan ready-made garment sector, the second largest in the world, depends on Chinese inputs. The most immediate and palpable impact of a Trump-Xi summit would be felt in the realm of international trade. A core feature of a second Trump administration's economic policy would likely be the aggressive use of tariffs as a tool of statecraft, aimed squarely at correcting perceived trade imbalances with China. This could involve sweeping new tariffs, perhaps as high as 35% or more, on a wide range of Chinese goods. For Bangladesh, this is a double-edged sword. The primary risk lies in the complex web of rules of origin, which determine a product's nationality for customs purposes. If Washington imposes stringent criteria that penalize products containing significant Chinese inputs, Bangladesh's flagship RMG sector could be caught in the crossfire. Consider the assembly line of a t-shirt or a pair of jeans near Dhaka. The cotton might be sourced from India, the fabric, the zippers, the buttons, specialized sewing machinery are often imported from China. If US regulations deem finished garments to have substantial Chinese content, they could face punitive tariffs like products made in China. That would erase Bangladesh's price advantage in the American market, its single largest export destination. US buyers would face a stark choice: absorb higher costs, or shift orders to countries with less exposure to the Chinese supply chain. That would threaten Bangladeshi manufacturers. But risk also creates opportunity. Bangladesh's economic miracle has been built upon a model of global integration, but this very integration now reveals a critical vulnerability, a deep-seated dependence on Chinese inputs. The country's factories, particularly in the RMG sector, footwear sector, rely heavily on China raw textiles, synthetic fabrics, specialized chemicals, dyes, machinery components. This dependency is not simply a matter of choice, but a result of China's unparalleled scale efficiency, cost competitiveness. Any disruption to this flow of goods, whether from US secondary sanctions, Chinese export restrictions, could bring Bangladeshi production lines to a grinding halt, highlighting the fragility of this arrangement. The fallout from a Trump-Xi summit could force a painful but necessary reckoning with this supply chain structure. If the United States tightens rules of origin to specifically target Chinese content, Bangladeshi manufacturers will be forced to diversify their sourcing. Potential partners, India, Vietnam, Turkey, ASEAN, may not match China's prices, volume, or variety in the short term. This transition would likely lead to higher production costs, squeezing profit margins, and more expensive exports for end consumers. The challenge presents a strategic imperative. Cultivate domestic and regional supply chains, backward linkages in textiles, weaving, accessories. The government could help with incentives, tax breaks, streamlined approvals to invest in local input production. Strengthening trade ties with India and BIMSTEC could build a more resilient regional network. Ultimately, the path forward requires compliance, diversification, and robust traceability for stringent inspections. Seek new suppliers and build domestic capacity, while leveraging regional partnerships to stabilize the export engine. The geopolitical current stirred by a Trump-Xi summit will inevitably redirect the global flow of foreign direct investment, creating opportunities and challenges for nations like Bangladesh. As tensions rise, risks of operating in China increase. prompting multinationals, including Chinese firms, to relocate manufacturing. Bangladesh. Competitive labor costs, a large workforce, an established industrial base, a prime candidate for relocations. Chinese investors facing high US tariffs may move production to Bangladesh to retain US market access. More factory FDI would deepen ties, bringing capital, technology, and jobs, while amplifying Beijing's influence and leverage. Dhaka must ensure investments serve national interests, without unsustainable debt or political dependence. At the same time, the United States, Japan, and Europe will offer countervailing proposals, pushing secure allied supply chains in apparel, pharma, IT, and light engineering. Investments might include technology transfer, workforce training, and preferential access to Western markets, an alternative to Chinese capital. To capitalize, Bangladesh must be attractive, reliable, and stable. Cutting red tape, ensuring policy consistency, enforcing contracts, and investing in ports, power, and digital networks. A transparent, predictable regulatory environment signals seriousness to all investors. The goal: don't pick sides. Create competition that raises the quality and quantity of investment for the nation's benefit. Beyond the high-stakes world of trade and investment, the consequences of a Trump-Xi summit will reverberate through issues that directly affect ordinary people: climate change and migration. A potential Trump administration might be skeptical of climate accords and reduce contributions to global funds like the Green Climate Fund. For low-lying, densely populated Bangladesh, this is a matter of survival. Rising seas, stronger cyclones, devastating floods demand massive adaptation investment. Embankments, resilient agriculture, and better early warning systems. Reduced US climate leadership would strain Bangladesh's budget and slow critical resilience-building efforts, leaving millions more exposed and instability rising. Bangladesh would need to seek finance from MDBs and potentially Chinese funding for green energy, yet the scale of need remains enormous. A tougher US immigration posture could reduce opportunities to work, study, or live in the US, dampening an important remittance stream and signaling trends to other Western countries. Fewer placements for skilled and unskilled workers would hurt families at home. Remittances remain a vital household lifeline and FX source. Bangladesh should double down on climate diplomacy, coalitions, and diversified funding, while diversifying labor markets and improving legal protection for overseas workers. That's the core of the challenge. The security chessboard, navigating the Indo-Pacific tightrope. The Trump-Xi summit is a negotiation over the architecture of global power, with the Indo-Pacific center stage. For Bangladesh, pressure mounts to navigate great power security competition. The United States, pursuing its Indo-Pacific strategy, will intensify a network of allies and partners to counterbalance China's growing military and economic might. Washington may seek deeper cooperation. Exercises, intelligence sharing, maritime patrols, even discussions about port access linked to economic incentives. Beijing would notice, viewing US strategy as containment. China could apply diplomatic pressure, citing deep trade and infrastructure ties, or offer its own package: hardware, training, and further investment. Dhaka faces a high-wire balancing act. Tilting too far to Washington risks alienating Beijing. Leaning toward China risks upsetting the US and Western access. The ultimate challenge is preserving strategic autonomy, friendship to all and malice toward none. Maintaining equilibrium will get harder as rivalry intensifies. It demands clear-eyed leadership, sophisticated diplomacy, and a refusal of zero-sum traps that undermine development, the battle for hearts and minds, domestic pressures, and propaganda. The tug-of-war unfolds not just in capitals and boardrooms, but across Bangladesh's domestic politics. As both sides vie for influence, they will shape narratives via media, social networks, and civil society. Expect more disinformation and propaganda, each side painting the other as the problem and itself as benefactor. Political factions, business groups, and segments of the public may align with one superpower, creating potent new domestic frictions. Foreign policy debates could turn polarized and emotional, with projects cast as triumphs or threats to sovereignty. Competing narratives erode trust and obscure facts, fueling unrest amid trade disruptions and unemployment. The state may spend more time on internal tensions and myth-busting than on long-term development priorities. Build resilience, stronger media, fact-checking and debunking capacity, plus digital literacy to empower critical thinking. Leaders must communicate with clarity and transparency, explaining choices in the national interest. A well-informed, united public insulates politics and preserves stability. A roadmap for resilience, proactive policies for Bangladesh. In a new phase of US-China relations, waiting is not an option. Adopt a proactive, multi-pronged strategy to enhance resilience, safeguard national interests, and preserve maneuverability. First, aggressively adapt supply chains. Create a national task force with government and industry to map vulnerabilities and secure alternatives. Identify cost-effective suppliers and build robust trade links with India and ASEAN. Turn vulnerability into strength. Second, sophisticated, persistent diplomacy. Seek tariff and origin clarity from the US, protect RMG, and leverage Bangladesh's strategic role. With both giants, articulate investment priorities and channel competition into infrastructure, technology, and green energy. Ensure tangible benefits for people. Third, improve the business climate. Simplify rules, digitize, and strengthen rule of law. Showcase stability to attract diversified investors and reduce reliance on any one source. Finally, uphold strategic autonomy. Decide by national interest, not bloc pressure. Build capable defense and diplomacy, foster unity, and strengthen democratic institutions. Ensure foreign policy reflects the national will, the balanced, independent posture that is Bangladesh's greatest asset. Conclusion: forging opportunity from uncertainty. The tectonic plates of global power are shifting. Tremors from a summit between leaders like Donald Trump and Xi Jinping will be felt acutely in Dhaka. The meeting reminds us predictable, rules-based globalization is giving way to great power competition. Perils, disruptive tariffs, single-source supply chains, economic shocks, diminished aid, and intense diplomatic pressure. Yet uncertainty creates incentives for positive change. Diversify supply chains, catalyze industries, grow self-reliance. With brands moving production out of China, Bangladesh has a rare chance to capture share, attract FDI, and create jobs. Leverage rivalry to secure better terms on trade, investment, and development assistance. Success depends on speed, wisdom, and resolve. Rapid private adaptation, sophisticated diplomacy, and a better business environment. Invest in climate resilience and protect the diaspora. Above all, maintain strategic independence, policy for Bangladesh's interests alone. This is a defining test. Can Bangladesh turn disruption into advantage with decisive action, strategic clarity, and national unity to emerge stronger, more prosperous, and more secure? The future is not to be feared, but an opportunity to be forged,